Cool. So, guys, we're getting the content right away. Welcome, Alejandro. That's a pleasure to have you here today. We want to talk about something that, I'll just give you guys a bit of background. And Mandy, if I break up too much, just you can explain and talk about it afterward.
Hmm.
But popular video, actually, a video that got like 40,000 or 45,000 views. What return you can expect in trading? And living here about like 100 to $200 per day. Much like it's acceptable, but not enough to live in any country. But that video was the video that was, yes, most viewed, but also most hated. About how to get realistic today, what kind of expectation you can have, a little bit more about that topic. So I'll let Mindy go with that, and I'll come back and whenever you need it. Sure. So welcome, Mindy.
Hello, everyone. Yeah, it's 40 degrees in Melbourne, and I'm sitting in front of my heater, sorry, in front of my fan, and in front of my aircon. So let's hope we survive that hour. After that, I'm going to go to the beach. Yay! But first of all, thank you to the people who sent us the questions, and we are going to try to answer all the questions as much as possible. Now, I want to show what Etienne is talking about. Let me just do that. And I'm going to share my screen. Okay, cool. So Etienne was talking about in a video, you know how he does those little videos, those 5-minute videos, and he was talking about how you can make $100 or $200 a day in trading Forex, and he based it on $25,000, and then this guy, real estate investor, had a very strong opinion. And we love those strong opinions. Everybody who was following me on Twitter also knows that I got challenged by Guru Leaks. And when you know your stuff, when you know who you are, you just laugh about it. So let them talk whatever they want to talk. But I want to. The guy actually raises a really good point, and I love that topic today because this is something that happens a lot in the trading industry. Number one, the real investor guy, totally misses the point, totally. And so I'm going to stop sharing the screen because it's taking a little bit of bandwidth that we don't have today with Etienne being somewhere in the wilderness of Cambodia. Oops, I think I lost. Okay,
No, we're good.
is
We're
everything
good.
good? Okay, good. So number one, the guy's totally missing the point because what Etienne was talking about was a concept, a framework of trading. And he explained how you can make $100 or $200 a day. And he gave the concept of it. Now, you can take any concept and multiply that. So if you do what Etienne was talking about, this framework, those 5 steps, and you double the input, then of course you get double the output. So it doesn't matter if you make $100 and $200 a day or $1,000 and $2,000 a day, because it was all about the concept, the framework. So this guy, obviously just a troublemaker, and there's plenty of them on Twitter.
Yeah.
But here,
But yeah, so the point is not so much about how much money you can make, because of course you can multiply and make a lot of money trading. But the point is more that you need some capital to make money, and you cannot like make $100 a day on $200. That's impossible, and that's what most people want to see or want to hear about. I maybe want to go to some realistic expectation, and I was just listening this morning to a wonderful audiobook called Daily Trading Coach. I'm sure, Mandy, you've listened to that in the past. You've read that in the
no,
past
I didn't.
from Resting Bogger. So really
Yeah.
recommend, and I'll put a link below after that.
Yeah,
But
Brett is a different style than me, so I don't want to be another Brett. So I don't get into his stuff, but
good point.
he's good.
Good
Yeah,
point.
it's not.
But
Yeah.
one thing he was talking about is the fact that the best portfolio manager at the place he was working at as a psychologist are like really, really good if they make 30% per year on the capital. And that for most traders would bring off a lot of pressure, because most people, they want much more than that. And people thinking that they can do more than that, they can surpass all the fund manager by being at their home on their laptop and trading, like, that's nonsense. Right? That doesn't make any sense. So I kind of want to tie this back to having realistic expectation, which we talk about a lot. But maybe we can go deeper on that. And maybe you've seen people who had like too high of expectation and they want to make like a million with $200. So how do you bring them back to like having realistic expectation?
See, and that's
'Cause
the thing.
this is really tough. Like this is a tough one, like even
Uh,
for myself in the past.
it's easy, Etienne. So, and that's the thing. Like, talking about that is only the surface level. What we need to do is we need to actually go underneath and beneath, the surface and find out what is the driving factor, what's the driving motivator of people having unrealistic expectations. Because I mean, we see that everywhere written. You have to have realistic expectations. Um, Target 20% rather than 20% a year rather than 20% a day. We see those messages, but nothing changes still. We still get those messages like this idiot on, or I shouldn't be judgmental, like this guy who said that it's not enough. So we need to address what's underneath that. Now, the thing is, of course, it's possible to make much more money with a $25,000 account than the 1 or 2% return that Etienne was talking about. The question is it sustainable over a longer period of time? And um, if you look at the reality of trading, that there is still about 80% of traders who never make it and who consistently create losing years, losing months. That tells us a lot, right? Now, the reality is that the reason why most traders never succeed is because they want to go for the big shots rather than starting small and building on that. And you're right. Even Tony Sycamore, a friend of mine that you interviewed, he goes for like 0.5%. Um, and he is an ex Goldman Sachs trader. He was super successful until Goldman Sachs unfortunately had to close down the offices here in Sydney due to the Dodd-Frank regulations. So that was a bit heartbreaking for everyone, but reality as well. So you can see that all the big guys do go for the smaller percentages because it's all about risk management. And he said to me, if I would create like I don't know, 5-6% drawdown, I would be in trouble. My Goldman Sachs would not put up with that. And when I work with traders one-on-one, they do like 6-7% drawdown a day. So something is wrong in the equation. There is a reason why the insto traders are performing on a very different level than the retail traders. Now, you also need to acknowledge that when you have a trading manager, when you're trading in a firm, you have a very different setup. You have a very different support mechanism, and you have also benchmarks. You can see how other traders perform. Whereas for the retail traders, they don't have this comparison. So often my traders, they are judgmental of themselves. They are disheartened because they think they're doing really badly, but it's because they don't have any comparisons, any benchmarks. They don't know how other traders are doing. When I show them that they're actually doing really well based on the progression where they're at, it's like, wow, this big revelation. And I can tell you, most traders are there already 80%. It's the 20% that they never master, that they never breach because of those unrealistic expectations. And I remember Steve Ward in one of his trader mind trainings, he's talking about the J curve, right? So it's like a J where you start trading, you go downhill with your P&L, and then the goal is to start improving your equity curve. So he's talking about the equity curve, right? That's the J curve. And if your equity curve doesn't go in a J curve, and within the J curve, of course, the ups and downs, like an uptrending market, much like the S&P 500 at the moment, then there is something you need to work at. Yeah, that's feedback for you. That's something that you have gaps in your trading strategy, in your trading behavior, and then the triggers to drill down into what is not working. Now, again, what I said before is what we need to look at is what is underneath those unrealistic expectations, because everybody knows what to do, but it's the doing what we know that is hard. And that's also a saying that came from Steve Ward. I want to credit him for that. And it is so true. Everybody knows how to lose weight, but look at the obesity problem that we have in Australia, and I think all over the world as well. Look at the financial problems people have. They know spend less than you earn, and yet they spend more than they earn. So what is going on here?
I think we need to get back to the chat because a lot of people are just commenting and joining us right now. So welcome, guys.
Okay.
Welcome, Mariana. Welcome, NTV Game. Welcome, Paladin. And welcome,
I
King
lost my
George.
chat.
Wonderful. Yeah, if you have any comment you want to address, then go ahead with that. There's a lot of cool comments. So NTV Game is saying, I'm taking larger risks now because I want to, because my account is small and I want to grow it. And once it grows, I'll reduce the risk, which I think can be fine to some extent, depending on how much you risk, of course. You never want to risk too much. But that could be a good approach.
And that,
Although I don't fully, but yeah.
and NTV Games, I get a little bit of an insight into what's into your mindset already, because you've been with us for quite a while, and you do have the mindset already to take greater risks, right? It is also growing into someone who can withstand greater risks, and so it's not just the strategy, it's also your mindset, who you are as a trader, where you are in your trading journey, what your life circumstances are like. When you're in your 50s, 60s, you can't take the risks that you took when you were in your 20s, right? Simply because you won't have enough time to make up for it. When you have a family with little babies, well, you need to have a very different risk management than when you're a free spirit like Etienne traveling the world, right? So we need to take everything into context. And King George, I'm totally with you here. That was my next point. It is, hey, Nick, it is also about risk management. It is not so much about how much we can make per day. It is more importantly how much we don't lose per day. And that you stay alive, that you stay, that you protect your capital. Again, most who say, oh, you can make much more money, they only think about making money. They don't think about the context, they don't think about the consequences, and they don't think about the risk protection. It's like driving a car, right? Of course, I can drive Merc AMG to 300 kilometers an hour, but do I have the skill to drive it? I had driver training. I can tell you, I'm glad I had driver training, because only when I did driver training, I realized how dangerous my driving was. Before I did driver training, I wasn't aware of it, right? It was a blind spot. And I thought I'm a really good driver, I can tell you that. But I think most of us think we are good drivers. So everyone should do driver training. And then you realize what level of driver you are. And it's the same for trading. So the other point I want to cover is, of course, what causes us to be risk seekers. So if you look at NTV Games, you say you're taking larger risks now because you want to hit the level where you can live off comfortably. If I were to drill down with you on that, I guarantee you, it would go down to it would come down to wanting to escape some element of life that you don't want to have. You want to have a life that's easier. You want to have a life that's more fulfilled. You want to have a life where you have more choices, where finances, where money doesn't stop you from doing what you want to do. And this was pretty much what I meant with last time about what I love about Australian Open. not everybody can afford to just hop on a flight from Europe and come to Australia and watch the tennis, right? It's really expensive here. So, but many people dream about that. And when they start trading, when they discover trading, that's for them like the only way out to escape their shitty life. And that's when the desperation comes in, the unrealistic expectation, on top of people who show you how you can trade off your laptop by the beach. I've never mastered that. I mean, have you ever thought about why the insta traders have like an 8-screen setup, and then you and have Reuters and have Live Squawk, hello Yogi Chen, on Twitter, who have all the whistles and bells to succeed, and then you think you can succeed with your laptop by the beach, sipping a margarita? Or,
Right.
good luck. So this guy, yes, you can make so much more money, but the guys who already make a lot of money, we don't need to talk to them. They have maybe other problems, but not the problems that we address here. So our our goal is, because Etienne and I, we talked about a lot, what is it that we want to achieve. Our goal is to, number one, help traders to lose money, because we see how much money brokers make, and it's driving me mad. I want to help traders to stop losing money and start making money. That's step one. And this is what Etienne was talking about. That was the step one. And then once you're in the J curve, you have broken back into profit, then we talk about the next steps, how to increase your performance, how to improve better. Then to have problems like some of my prop traders, how do I grow from 150,000 a month to 200,000 a month? Yeah, they can talk about making more money return than than the majority of traders. So yeah, every avalanche begins with a snowflake, and I hope that you guys start with a snowflake and turn your trading into an avalanche.
Love it, love it. Anson Fun, good question. What is the realistic monthly return and yearly return? I have a video on the channel that's like 5 different traders sharing a monthly return expectation and what they look for in the market. And it goes all the way from like 1% per month to at most 10% per month. And that's like rock star. That's like high level. So beyond that, you could say it's not sustainable.
Yeah. Hello, Mariana.
Yeah.
Nice to see you. Congratulations on your baby boy. He's cute. Thank you for sending the photos. Cool. So my answer to that is I have a friend. She is a mathematician and a quant in a hedge fund. And and I asked her about that question. So because we get traders who perform in the high 80s, 90s, as well as traders who perform in the low 35, 40% profit loss ratios. And we know that profit loss ratio doesn't mean anything, because you can have really big profits and small losses, or you can have really big losses and small profits. So it doesn't give us the scale of the profit and loss. So the results, so based on mathematics, my friend said the ideal is really the 65%. That's the sweet spot. And the 65% profit loss ratio is based and ties in with a 2-to-1 reward to risk, or 1-to-2 risk reward, right? However, if you are a trader who performs on a high level, who has 85% profit loss ratio, the question I have is, how sustainable is that, number one? And that question is based on, do you let your losses run and you get lucky because they go back into profit? So it's the MAE and MFE that Alejandro helped me with last time, that I got the wrong way around. But it's really, how much does your trade go into a loss before it goes into a profit? Right? So take that into account when you have your 80-90% profit loss ratio. If that stays within an acceptable, so if you follow your risk management to the T and you still have 80-90% profit loss ratio, fantastic. Now, someone who has an 89%, 80-90% compared to 40 or 50% profit loss ratio has to do different risk management. Yeah, so if you have many losses, you need to keep your losses much smaller than if you have only a few losses. So there is no clear-cut answer, but mathematically, the sweet spot is 65% profit loss ratio, and that's where the 2-to-1 reward to risk comes in. Hope that makes sense. Now, in terms of profits, I love this average. So if you saw one guy on Twitter, amazing trader, amazing guy, hedge fund guy, was down massively up until August. And then by the end of the year, he came out 50% plus in profit. So you can see that there is no clear-cut answer because it's also dependent on the market. Many traders make really good profits now in the equity markets, or even in crypto, because there was just one way up. For the trend traders, perfect market. But the trend traders, they didn't perform when the DAX, for example, did the sideways market action. Now, you need to know what your strength is. If your strength is a reversal pattern trader, like I'm an amazing reversal pattern trader, I'm not so good at trend trading. So I know when the market is in a trending phase, I'm not doing so well, and I'm waiting patiently for the sideways phase when I perform like a world champion. But on the other hand, most trend traders, they don't know. So most traders that don't know where they best performances are, if they perform best in trending or sideways markets. And this is where our work comes in, Etienne, in doing the psychometric testing, where we do really deep assessments with you guys, what your strengths and what your weaknesses are. If you're naturally suited for short-term trading or longer-term trading, for swing trading. And I love working with Etienne because Etienne and I, we are so different, like the opposite almost, and we can cover everyone in the market. So Etienne is a swing trader, most probably not performing so well in the scalping like I do. I can't swing trading for my life, but I'm really good at scalping. And every time I try to be a longer term trader, I don't perform. So I need to make sure that I stay true to myself and don't try to be someone else or get swayed by someone else's opinion, and just do what my sweet spot is. Sorry, Paladin, that the video is a little laggy. That's that's life. Race car drivers have to deal with car problems, as Steve Ward said once to me. Traders have to deal with technology problems. Tennis players have to deal with the heat here in Australia and injuries on their body. Yeah. Jesus. So to get back to your return, I don't have a fixed return number. I always go back to do your testing. So with Alejandro, we did the risk of ruin exercise. That was amazing. Thanks, Alejandro, again. So he knows exactly how his system performs. And so if you have a system that performs, I know traders, they do make 10% a day, but their system is thoroughly tested. And it's not that he trades by the seat of his pants. It's like he knows the numbers, because he does keep an eye every week if his system is still in the sweet spot. Risk of ruin. What was the other one? Jesus. I forgot. So basically, it's all the so many questions. It's all the data that back how your system performs, and that's what you base your return at, not pulling a number out of your crystal ball and say it should be 3%. Can be anything based on your system.
Love it. How do you take profit? This is a simple question. I think there are so many ways to take profit, and you have to find the one that you prefer. So Mandy and I are gonna have different ways of taking profit. I personally aim for a fixed reward to risk. So let's say 3 to 1, and I take partial profit. So I found this is a way for me to be most comfortable and not interfere with the trade. And at the same time, it makes more money over time because I know I have a big enough reward to risk, and I don't have to worry about the ups and down and the trade that's going to profit go back to loss. So that's my way. Maybe Mandy, you have a different way. I don't know.
Yeah, very different because again, I trade so short term, and another friend of mine, he's in the market for months. So that is. Are you already on the scotch, Etienne?
No, that's green tea.
It just looked like scotch.
Good morning. Yeah.
So he's in the market for months, but he deals with millions of dollars, so you can't move millions of dollars that easily. But I actually prepared something just to give you an idea. Um, and this also answers one of the guys. Going to share my screen again. So it was, let me see, it was Tim's Trading who asked a similar question. Okay, screen share.
By the way, guys, if you like the video and if you got some value, just give it a like. That would be really appreciated. We always like to see like what video perform best and which one you guys prefer, so we can do more of those in the future. So if you like this one, give a like, and that would be much appreciated as always.
This one is the euro, right? For example. Now I don't trade the euro that much, but I thought this is really beautiful, a beautiful example to explain how I would take my profits. So let's suppose, and the time frame doesn't matter. I would trade it the same on a daily, like I would trade it on a monthly. Sorry, on a 1 minute. So let's suppose euro came out here, very strongly breached this resistance level, and let's suppose I were to go long. I would put my stop loss somewhere down here, and so I'm a technical trader. That means I measure my stop losses technically. So there's monetary stop loss and technical stop loss. Actually, Etienne, sorry, I just want to do the disclaimer. Do we have the disclaimer?
Sure, go ahead.
Okay. One sec, guys, sorry. You want to talk in the meantime, Etienne?
Yeah, I'll check it out. So I was just reading the comment.
Oh, okay.
Personally, take profit between levels. Makes sense. Yeah, and levels makes a lot of sense. Yeah, for some people, I just prefer to have a fixed level, and that's what I've, and it's, especially when you back this with like a script or whatever, like much easier to take profit based on what to risk instead of level, because a level is really hard to figure out and point out. So, but yeah, if it's not them, I'll personally good. Yeah, exactly. So I prefer the like take the what to risk way because I can back this more easily. But that's yeah, that's the way I prefer. Support resistance zones are difficult to program. Exactly, and that's the big part. Yeah, when you look at a stop loss or take profit based on a level, stop loss less, but at take profit you have to really like be there to look at the chart, and this is really hard to program. So there's some things you can do with like round numbers and stuff and pivot points that I'm trying to test right now, which is really interesting. But in general, it's going to be more difficult. Yeah, that's right.
Okay, guys.
Totally right.
Sorry, we need to do a disclaimer. I've become very sloppy with that, but it's very important that we are making clear that I myself am not licensed to talk about teaching how to trade technical trading. I feel that I am qualified but not licensed. License here in Australia costs about $2,000, and then you need to get insurance as well. So not willing to pay that money to teach technical. So trading involves the risk of loss. This presentation is for educational purposes only and should not be solely relied upon as a recommendation or invitation to enter into a particular transaction or to apply a particular trading strategy. It is also not intended to be a substitute for professional counseling, therapy, or medical treatment, nor is it intended to diagnose or treat any psychological condition. I'm a trained coach and not a qualified counselor, psychologist, or psychiatrist. And also, as I said, I'm not licensed, even though I feel I'm qualified after 15 years of trading. So you should not engage in trading unless you understand the nature of the relevant markets, the rules and application of these rules to the strategy or strategies you are trading, the products, and the full extent of your exposure to risk of financial loss. The information contained in this presentation has been prepared without taking into account the objectives, financial situations, or needs of any particular client. And because of that, the attendee should, before acting on any information, consider the appropriateness of the information, having regard to their personal objectives, financial situation, and needs, must seek professional advice. By attending this presentation, you do so at your own will, and in doing so, waive liability to any claims against the host, presenter, and any associated organizations and people. And that's coming with love from my lawyer. Let's go back to the fun stuff. So let's suppose I had gotten into this trade, yeah, and then what I do is I look at does the bar make open lower closes? Open higher closes higher. Yes, open higher closes higher less. Yes. So at the beginning, the most dangerous part in trading is when the trade takes off or not. And it's the same like when the plane takes off or lands. It's also the most dangerous time, right? So I see the same in trading. And so then we have sideways action here. And you can see I can start drawing some lines here. Of course, I don't know the future, but I know the past. And so one benchmark for me is as long as my trade stays above this line, I stay in. The reason why I use this line is because my moving averages, they need time to catch up. So at the time of this trade, my moving averages might have been down here, even though it looks beautiful in hindsight. At the time, would have not been the case. Yeah? So we want to keep it real as well. And that's why I also love the middle Bollinger. So you can see the trade broke out, went above the middle Bollinger. And so I have 3 benchmarks here. So number 1, my stop loss is down here. Then my benchmark is if my price stays above the middle Bollinger, I stay in the trade. Another is as long as my 8 open close, which is, by the way, a piece that I learned from Jake Bernstein. As long as price stays above the 8 open close, I stay in the trade, because what I also found is that price always wants to go back home. So it runs away and then it comes home. It runs away, it comes home. So that is another benchmark. And you can see that here price actually moved away from my line that I was able to draw here. So now I have a choice. I can start drawing my lines here, because you can see the 8 open close starts closing, coming together. And I can say, well, that was a really good trade. That'll do, pick. And I take my money and run when it breaches this line. Or I say, well, it should get back to this bar trend line, and then let's see what's happening. The reason why I would stay in this trade is because there is no real reversal pattern here, reversal signal that I would be concerned about. But see this one, for me, I love this reversal pattern because it's a doji outside the Bollinger, very, very high profitability for me, again, based on my statistics, not on something that I pull out of my crystal ball. But you can see price goes down to the middle Bollinger and then it bounces back off. So this one actually failed initially, and then it came back down, and then it made a little nice move to the downside. Excuse all the different lines, because I don't use all the moving averages at the same time. I just use what I need in the moment. I'm just too lazy to take them all off. My eye is trained that I only focus on what I need. So I would only focus on the Bollinger for now, but I would totally disregard those blue, yellow, and orange moving averages. They have a different purpose for me, for different instruments. So on the DEX, they would look very differently than on the euro, for example. So that is how I personally look at my exits. Very simple. Do we still make higher opens, higher closes, or sideways? And are we above our line and our middle Bollinger? So you can see that I take a combination of information to ascertain how long I stay in my trade. I don't worry too much if it's so you see I got out here, it kept going. I don't worry about it, I don't, whatever. It's like when I go to a buffet, I don't worry about not having eaten everything from the buffet, right? I just eat what I feel like, what I want, and then I go back the next time. I buy another buffet, and the market is like a never-ending buffet. It's like La La Land. It's like um, always something else to find. So I hope that answered your question, Tim. There's so many different ways of looking at exits. Um, Also, what I want to add to this is we can't use the exits and the entries in isolation. So the way I use my exits, Tim, might not be useful for you because I don't know what your entries are like. So we need to look at the exits in in context of your entries and also in context of your risk and money management. Yeah. So that is what is really, really important.
I
Hope
love
that
it.
was
Many giving
useful.
technical lessons. That's awesome. Yeah, wonderful. Here's one interest in the interest of the audience here. When you look at your Bollinger Band setup, are you looking at all the pin bars set up on the Bollinger Band, or only in some context? Because for me, context is big, but I don't know for you
Yeah.
if it's the same.
Totally context. Never use anything on its own. I never would
Love it.
use a pin bar outside the Bollinger, which is my favorite entry, on its own. I want to see it off a support resistance area or Fibonacci line, or like that's why I look at the big picture as well. I trade the 1 minute for goodness sake, and I look at the monthly, so that on the monthly you can see so beautifully where the major support and resistance areas are. When I'm on the 1 minute, I can't see that, but because I have that already in my chart, I don't need to worry about it because when my 1 minute goes to the monthly support, I'm like, oh, wow, better be careful here.
But are
Yeah.
you gonna wait only straight at the monthly zone? Because that's gonna take a long time, no?
Oh, no, no,
Is
no.
it?
That was just an example. So to let me rephrase that. So I use Bollingers in several contexts. Number one, what I first do is I go through at the beginning of the month, which is in 2 days, 3 days, I would go to my monthly chart and draw the new major support and resistance areas. That's all I do for the monthly chart. And major, maybe, what's it called, downtrending and uptrending lines. So that I know when I'm on my 1 minute chart that we approach this area because I can't see it on the 1 minute, right? So it's kind of like putting on my high beams so I can see what's happening on a wider scale.
Mhm.
Every week, I do the same for the weekly chart. Every day, I do the same for the daily chart. Because I'm so focused on smaller time frames that I don't use the daily or weekly chart as my entry. I want to make sure that it protects me from falling off the cliff. Does it make sense? If not, please let me know because
Yeah. And all these on your trade. So yeah, especially in the little time frame. Love it.
yeah, yeah.
Question from Dev Pat: is it possible to get a template? Well, you don't need a template. You just put the indicators we talk about in your chart, and that's it. Nothing more. So templates
Yeah,
are good, but it always comes back to like have your strategy. Don't try to rely on other people and what other people tell you to do. Like we talk about some things today, but here's what a losing trader would do: would go into this and a good trader, like a highly successful trader, would take this, use it, like make a note in his notebook, and use this as a possibility, like an idea, and then go back to the drawing board, test stuff, see if it works, work for yourself, and then you apply. So there's a big difference here.
Yeah. DevPad, it's also there is a lot of finesse in that system that I'm using. It's a lot of details that I would need to explain to you how I use it. I'm happy to tell you what they are. It's just a standard Bollinger. It's the 72 moving average, the 216 moving average, and the 8 open close. That's the moving average that I have from Jake Bernstein. What I did, guys, is when I started out trading, mind you, that was at the time when I had to go to seminars. There was no internet. Had to pick up my phone to call my broker. There was no online trading. Um, so I studied. So I bought systems and I studied them, and I was like, why can't I make it work? But then what I did is I took the goodies, the best pieces out of every system, and put together my own system. And it's also tailored for my personality. So what works for me might not work for you, DivPad. And that's why, as I said, I'm happy to tell you what I'm using, but how I'm using it, that's where the trick is. So I don't think it would be useful for you. That's the thing. Yeah. You take one,
Yeah.
DivPad, take one
And I
piece.
also did the same thing.
Yeah.
Yeah,
Sorry,
go ahead,
you
go
go.
ahead. No, you
Just
go.
take one piece, take the Bollinger, and use what your favorite pair is. Let's say it's the euro, and look how the euro performs with the Bollinger Band on each. And this is how you get to learn what works and what doesn't work. Because if you look at the S&P, for example, at the moment, reversal patterns they fail all the time. So not trading reversal patterns on, on the S&P. Yeah. So you need to look also what is working at the moment.
Yeah, exactly. So context is big here in anything.
Yeah.
And I wish we didn't have to use the context. That would be way easier. And I know there's ways which I'm kind of testing all the time for my own pleasure. But context is still big when you want to trade whatever thing you want to trade. I saw a question earlier that was about um, is it easier to swing trade Forex or stocks? I don't know who said this. I think that was Naib. Is that possible? I don't know. Not sure. Yeah, exactly. So I think, and Mendy maybe can go on that, but in different market. And I think fund manager I was talking to told me that when you hire in a bank or in an institution, all these different plays in stocks and option and whatever bond, if you want to trade bond or forex or whatever, like where you perform best, and then they put you in the right spot. So you go back to whatever you prefer, and of course there's some like I personally go with forex because of the time zone as well. Whenever you travel, really hard to trade stocks, especially if you're gonna trade like at night or whatever. That would be really difficult. What are you best at? You want to add to that,
Yeah.
Mindy?
um, Again, most they pull the answers out of a crystal ball. Just to keep it clean here. I would like to say something else, but I keep it clean. Look at your statistics. The reason why I trade the DAX predominantly is because my statistics tell me I perform best in the DAX. My statistics also tell me do not touch gold. Gold, you can make a lot of money in a very short period of time, but you can lose a lot of money as well. So my statistics show me I don't perform in gold. I don't get gold. I don't understand gold. Maybe I need more gold jewelry so that I understand gold. I have no clue, but do not touch gold. That's what my statistics tell me. My statistics tell me that I do really well in the euro and the Aussie dollar, but it tells me also stay out of pound yen because pound yen, bad results. So get your account connected to my FX book, or get Edgewonk, or get a spreadsheet. Etienne has a spreadsheet that we using for the academy guys. If they don't have the ability to connect with anything that they would like to connect with, so and then you see where you perform best. It's and also that's where psychometric testing is so useful. My personality behavioral profile shows that I'm really good at short term. And again, I can't tell my story often enough. I used to be a show jumper on a horse. How is the behavior on show jumping? Very short term. You see an obstacle, you focus, you take that thing, you jump over, you relax. But if you are a marathon runner, I would suggest that you're better at longer term trading. I'm saying because a client of mine is a marathon runner. He would not like short term trading. He wants to take his time to prepare, to have his thoughts gathered, to really evaluate everything that could happen, and then he takes his trades. Whereas my eyes are so trained. I see it and I take this thing. I know exactly immediately where my stop losses are and what I have to do, right? So because I'm so trained in it. So yeah, there is no right or wrong answer. Find out what you have been doing as a sport maybe, and then you get a little bit of insights as well. If you don't do sports, look at something else. Do you like faster or slower pace in life? Yeah, so the magenta colored one was the 8 open close. Again, Jake Bernstein is the one who I learned it from, and I found it really useful because the 8 open close is almost like a trend. And when they are far apart, that shows me that the trend is still very strong, because what it says is the 8 open shows the last opening prices, and the 8 open shows the last closing prices. So if the open is higher than the close, moving average, that shows that bars on average still open higher than they closed, right? So then the previous bar closed. I hope I didn't confuse you now, because I confused myself. But Paladin, I think that must be the problem on your end if you lost us. But you can see the recording, then you can make up for the minutes that you lost. So again, to get back to the 8 open close, so this is why I love the 8 open close, because it shows me really nicely when the bars go up, and it shows maybe a reversal pattern like the euro did, but the 8 open close is still far apart. I know that the probability of this reversal is diminished, because when I have a reversal, I want the 8 open close to be close together, because that tells me that the trend has weakened, because the opening and the closing prices are starting to not be as strong anymore. Yeah, so this is again context. Hope that helped, DevPad. So 8 open close. There we go. What else do we have?
Yeah, and here's a skill that's really important, and that is the ability to be willing to do experiment and test.
Yeah.
Because like many said, she started to trade everything, what she was best at, and that's really important. Some people are not willing to take risk. Like, and by risk I mean like trying new things, trying to trade this, that, and you don't need to go all in on everything. You just try stuff out, you see what works best, and that's how you get to improve and find where you're best at.
Yeah. So, for example, I had a chat with Mariana, right? And Mariana, she just loves crypto, and I can see how she loves it and why she loves it, and she's so good at it. Whereas put crypto in front of me, and I'm like, really, no, not interested at all. So it also comes down to what your passion is. I love Forex because, I'm from Germany. I lived in Hong Kong. I'm in Australia. I have some amazing Forex friends. So I understand Forex. I have a feeling for it. It's a physical experience with Forex for me. Whereas with crypto, it's like, it's like nothing, right? No idea, not interested. So, but I don't disqualify or discount Mariana's experience, because she loves it. I can see that she thrives on it. She can spend all day on researching it. So find out what you love, what makes you happy. I love the decks. I can feel the decks. The decks to me is like like my dog, when I can see that, he did something naughty and he pretends to be everything is good, right? The dex is the same. Dex, like for example, the dex loves jumping points, like 20 points, right? What the dex does, it does this nice little wiggle on the 1 minute. and then it jumps. Like most people wouldn't know about that, right? But because I know the deck so well, I can have high probability trades in something stupid like a wiggle on a chart. I mean, you know, I don't know if any hedge fund would take me if I would say I trade wiggles on the next chart. There you go. But it works for me. Who cares? And it makes me happy. It's like, yeah.
Love it. And then I think Mariana's trying to bring you the crypto side, but we'll see if that happens. It's gonna be interesting. Yeah, good comment from Anson. So basically, since we cannot predict the market, there's no point in technical analysis. Well, that's not true. Analysis do is it kind of puts the odds in your favor and adds probability to your trade. So if you were to just trade support resistance, I don't know how good you would be with that, and I don't know how if you would be able to get a good reward to risk with a good win rate. So the point of analyzing the market and looking at indicators and charts is that you can add more confluence, more probabilities in your favor, and that's the only thing there is to it.
You know, I know traders who trade totally with no chart. They look at price
Yeah,
action
yeah.
only. And I show them my chart and they're like, I have no clue what you're talking about. And then they talk to me about their order flow and it's like, I'm lost. I do look at order flow as well. I don't only look at charts, so I use them in combination, but I couldn't trade just off order flow like, you know, many of really amazing traders do. So again, it just comes down to how your brain is primed. I'm so visual. Um, don't have a brain for numbers. Oh, I'm glad that I have friends who are very mathematical, and I can ask them when I need to. So look at what your preferences are in terms of how you process information. Exactly, I love that. Alejandro, the reality is that most wouldn't understand what a statistical edge to the expert inefficiencies in the market mean. Again, that's very much hedge fund talk. That's how, you know, my Skype group talks. You could argue, you know, how could you argue that a reversal pattern outside the Bollinger is an inefficiency in the market? So again, that means everything to you, but maybe means nothing to a visual person. Yeah, and we do forecast. Yeah, we can forecast. I know some amazing forecasters as well, but we can also just trade what we see in the moment. I'm not good at forecasting. When someone asks me what is your profit target, I'm like, no clue. And you could see that in the way I trade, right? I go like, bar, why does Tim say no live cast today? I can't answer here, unfortunately. I don't know. So you can see that I take it bar by bar. You know, it's like, oh, we still open higher and we close higher. Oh, we still open higher and we close higher. Oh, now we go sideways. Fine. We're still above my Bollinger. We're still above my moving averages because I know when price has moved a certain amount that it's inevitably has to come back a little. So I am very much a momentum in the moment trader, whereas others, they can say, I enter here, it's a double bottom, profit target is up here, where the resistance is. It's like, doesn't work for me. Works for others. Works for you, Etienne, I think, right?
Yeah, different style. Cool.
Yeah.
I think we'll
Wow,
wrap it
an
up for
hour
today, guys,
already.
because it's already an hour in. One just by so fast. It's incredible as always. And I want to give a quick plug for the Academy content there. We just finished a 12-week program with Mandy. That's all in the Academy. Some of them are coaching sessions, but there's like 6 really big sessions that can help you question. That's going to be awesome. So link is below. On risk management, on you can use. So everything if it sounds like a good fit, go ahead. If it's not, that's fine. We accept it, and we understand that different people are at different level in their career or in their learning curve, and that's fine. But check it out. Links gonna be below. And Amanda, you have
Yeah.
any last parting words of wisdom you want to give people?
Well, I think you broke up again, Etienne, so I will repeat it. So as you guys know, Etienne has the academy where he teaches systems and structures and risk management. etc. And he said a piece that I found was missing was psychology, trading mindset. And so we ran a program that is also now part of the Academy of the Elite Academy, I think. So if you're interested in finding out more about Etienne's Academy and also have a psychology training as part of it, then that's in the link below. So yeah, cool.
Much appreciated. Awesome.
Okay,
Stay tight. We'll
thank
see you
you.
pretty soon. And new video coming up. I think today we'll have one sayings that people say in trading and all sort of random stuff. That's going to be today. And more to come. As always, if you're not subscribed yet, make sure you subscribe and we'll catch you guys pretty soon.
Thanks, everyone.